if you look at the reasons people were buying gold over the last 2 years, have they changed? And the answer is no. Central banks were buying to diversify away from the dollar just because they've got too much dollar reserves in their reserves for too many dollars in their reserves just for prudence, but also because of the weaponization of the dollar. Is that going to change? On the contrary, President Trump-elect or President-elect Trump has threatened to punish countries that try to move away from the dollar. So that approach is only going to speed up the process.
Since the U.S. presidential election on November 5th, financial markets have seen a notable shift in the performance of traditional and modern hedges against economic uncertainty. Gold prices dropped sharply after Donald Trump's decisive victory in the 2024 election, as growing market confidence reduced the demand for safe haven assets. The 2 days following the Republican win were the worst for gold in at least 13 election cycles, according to Deutsche Bank. Since Election Day, gold has declined nearly 7%, marking a sharp reversal for a commodity that had climbed over 30% in the year leading up to the vote. Adrian Day, chairman and CEO of Adrian Day Asset Management, notes a wave of optimism surrounding economic growth following Donald Trump's recent election. However, he believes that the market's sentiment for gold has been largely negative in the short term. According to Day, the anticipation of more robust economic performance under the new administration suggests that the Federal Reserve may delay cutting interest rates, which has weighed on gold prices. The recent decline in gold is closely linked to expectations about U.S. fiscal and monetary policies. The Republican administration is anticipated to propose tax cuts, boost government spending, and ease regulatory constraints, measures that could foster stronger economic growth and potentially higher inflation. Consequently, the U.S. dollar has strengthened, exerting downward pressure on gold prices. As the market has started to factor in these expectations, the U.S. dollar has appreciated against other currencies, and against gold. Adrian Day does not anticipate a significant change in the outlook for gold over the next year or two. He points out that President-elect Donald Trump has threatened to penalize countries that try to reduce their dependence on the U.S. dollar. In Day's view, such threats will likely accelerate the move away from the dollar, making gold even more attractive as a safe haven asset. As we dive into the video, remember to subscribe and tap the bell icon so you never miss an update. We value your thoughts, so drop a comment below and give us a thumbs up if you enjoyed the content.
There's certain things that I think are almost inevitable in the near term anyway. Obviously, with President Trump, when he was elected, there's a lot of optimism on economic growth. Which means that the Fed could be slower in cutting rates. That's negative for gold. There's a lot, and economic growth and slower rate cuts means a higher dollar. That's obviously negative for gold. There are some concerns among some economists that his program will be inflationary, will add to inflation. But again, inflation maybe is good for gold, but inflation means that the Fed, again, will be slower in cutting rates. That's negative for gold. So all of these things on his election was sort of, the sentiment, if you like, was that it was negative for gold. And I certainly think that if you take the most optimistic view of the next 4 years of Trump 0.2 or 2.0, whatever they say, we could indeed see more economic growth with Elon Musk and Vivek Ramaswamy, taking knives to the bureaucracy and to waste and to overlap. There's an awful lot of that. I mean, they just at the Pentagon had an audit and they just announced there's $800 billion and they don't quite know where it is. Well, I mean, I had no question that, with hard work, you can cut a lot of fat out of the budget. Okay, so the optimistic case is really, and that's if Trump stays on message and doesn't start tweeting angry thoughts at 3 o'clock in the morning. But he's got good people around him. And that's what gives me optimism. I'm rambling, I'm sorry. But that's what gives me optimism, because in his first term, he had a few people like Steve Bannon, and then I'm thinking of the gold company. And then he also had like his chief of staff, John Kelly. Well, when John Kelly walked into him and said, President Trump, don't do this, you're an idiot, what does Trump do? He gets all mad and fires the guy. when Elon Musk goes in and says, hey, Donald, I think we ought to do this a different way, maybe there's optimism to think he might listen. So there might be optimism over 4 years, but in the near term, we've still got inflation that's not at 2%. We've still got an economy that's slowing, and unemployment that's moving up, and jobs growth that is very slow. We've still got a budget deficit. We've still got a huge national debt. And again, even with the absolute best will in the world, those two that I mentioned are not dictators. In fact, they don't have any power to cut anything. They're advisory roles. So even with the best will in the world, getting some of this stuff through Congress, it's going to take time. So what I'm trying to say is that for the next year or two, I don't think the picture with regard to gold has really changed much.
Central bank purchases and rising investor appetite have driven gold prices to record levels, but the recent pullback has some questioning the yellow metal's ability to continue its rally. Central bank gold purchases have reached historic levels, with nearly 400 tons acquired in the first half of 2022 alone, the fastest pace in 55 years. Day explains that gold's rise over the past 2 years was largely due to central bank purchases, with a surge in Chinese consumer buying early in the year. However, he notes that Western investors had been selling off their gold holdings during this period. Although central bank gold purchases slowed in the third quarter, analysts expect demand to remain consistent for the foreseeable future, as nations continue to diversify their official reserves away from the US dollar. Goldman Sachs also noted that the US government's growing debt could prompt more central banks to increase their gold holdings. Now, let's redirect our attention to a video.
I think the election of Trump has made people think that we can have a much stronger economic growth, and with cutting regulation, with cutting taxes and cutting regulation, we can have more productivity. So, these things potentially are very, very powerful. I think as powerful as say, Reagan in his first term. But the Fed is another issue. And if the Fed is data dependent and waiting to see what the data is, all the way up through to their next meeting, then gold investors are not illogical to say we're going to kind of wait. Now, if I may just step back, we all know why gold went up over the last 2 years. So the central bank buying, and then at the beginning of this year, you had a huge pickup in Chinese consumer buying, right? And you had continued Western outflows. It really wasn't until July, August, September, and then particularly in October that you started getting a change in that and Western inflows. Very small in June, July, but slowly picking up. And those Western inflows came in at precisely the time when central bank buying was slowing, easing, right? Down, I don't have the number in front of me, sorry, but down significantly. The third quarter was down significantly from the third quarter of last year. I think down 50%. Now, last year was a record high, an all-time record high, but still, we're down significantly in the third quarter. And Chinese buying actually collapsed to its lowest quarterly number in 10 years, staggering from what they had been at the beginning of the year. So in the third quarter, you have central bank slowing and Chinese buying collapsing, still positive buying, still net buying, but collapsed from what it was. And fortunately, the Western investors started to come in and fill that void. But now that the Western investor has stepped aside, that's why we saw gold, fall the way it did. Now, I'll make a point, if I may. You talked about $200, and you're right, of course, $200, that's quite a lot. Yes, it is. But when you see gold has gone up from bottom to peak in the last 2 years, it went up 72%. And from top to bottom, that's a little bit before the election, but from top to bottom, it corrected about 7%. That's not a huge correction. And again, after 2 years when gold had gone pretty steadily up, without much of a correction at all, and all we've done is gone back to the end of September. Again, I would say what we've seen is really a pretty modest pullback. I mean, it just freaked us all out because we were just about beginning to enjoy the party. But isn't that the way it always goes?
Since the U.S. presidential election on November 5th, financial markets have undergone a significant shift, impacting traditional and modern hedges against economic uncertainty. A strengthening U.S. dollar, supported by easing inflation and steady economic indicators, has added downward pressure on gold prices. Additionally, the Federal Reserve's stance on interest rates, indicating no immediate plans for further cuts, has diminished gold's appeal as an inflation hedge. According to Adrian, this evolving landscape underscores the interplay between monetary policy and market sentiment, further influencing gold's trajectory in the short term. What's next for gold? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.